Hi everyone, welcome to episode 3 of Crypto Q&A. Today with me, I have some pretty cool guests. Vortex, you might be familiar with. Vortex, how you doing today?
Hello, Heidi. Good evening. Very nice to see you again, and I'm really excited to answer everybody's questions.
And our special guest today is Nick Carter. Hi Nick, how are you doing today?
Hi guys, thanks for having me on. Super happy to be on.
Cool. So let's get into some different kind of topics. Like I guess not really different topics about Bitcoin, but okay. First, let's talk about Vortex and what you've been happening with your workshop. You've held a few workshops lately, and where is the next one being held, and what are your kind of long-term goals for that?
Yeah, so just really quick, just to get the conversation started, we are still doing the workshop, the programming with Bitcoin.com workshop, both myself and the creator of and Bitcoin, Nicolas Doyer. So the main goals with that is just trying to create more application developers, basically get more developers working with Bitcoin at the application layer. So creating more apps, creating more use cases, creating more reasons for people to use Bitcoin. So I think that that's going to be a really important step moving forward. I mean, many developers have already said this, Peter Todd, and the Lightning developers as well, Elizabeth Stark, Matt Corello, they've all basically said that we need obviously an order of magnitude more application developers than protocol developers, though protocol development really is the most important because it also ends up being the most niche and the most difficult. So I'm trying to get a bunch of regular application developers using Bitcoin with this workshop. We're trying to take it around the country right now. We've already had one in Las Vegas, which was really great. And now we're going to have one in San Francisco and October 13th. And then Seattle, November 3rd. So, and actually, we're going to probably be taking the course online pretty quick as well, having an online version of that course that we can do directly with YouTube pretty soon. So that's really what's going on with there. We're really focused basically on this channel, the CryptoCast Network, and then the workshop. That's the two big things that I'm focused on right now.
You guys are dominating the West Coast, it seems. Nick Carter, just so our viewers can kind of get a background of who they're listening to, who they're going to be posing their questions to, can you tell us a little bit about your experience working with the Fidelity Investments company and what you've learned from your past there, and maybe more importantly, why you've chosen to go the cryptographic cryptocurrencies route?
Sure, yeah. For context, I guess I was hired as Fidelity's first crypto asset analyst or public blockchain analyst in mid 2017. So it was basically an equity research role, except it wasn't equities, it was blockchains. But not the private ones. We were mostly interested in public blockchains. And I originally set out to have a conventional career in finance when I did my master's in finance, but I just I caught the bug, I think, like everybody else, and I realized after a while, after graduating, that there were actually jobs available in this industry and that I could turn my hobby into my profession, and it was amazing. I was actually turned down by Fidelity for the equity research gig a year prior to being hired as a crypto analyst. So it's kind of this strange just turn of events that I ended up coming on board as their crypto analyst. And what I did there was just essentially try and develop a research philosophy and a body of knowledge for public blockchains. I was working for a small proprietary fund that was investing in crypto assets directly at Fidelity. And then I ended up leaving in earlier this year and spinning out into a venture fund based in Boston as well. So that was definitely an amazing time. Fidelity is definitely one of the more progressive, large financial institutions when it comes to cryptocurrency and Bitcoin. And it's super interesting journey there. It was really interesting to learn about how large institutions trying to interact with public blockchains, and there's a lot of tension there because typically the compliance and risk departments hate that stuff. So it's a kind of a tightrope walk if you're like a bulge bracket or Wall Street institution trying to actually engage in any way with Bitcoin or Ethereum. And I believe that the outcome will be super positive for both Fidelity and Bitcoin when some of those projects get launched and go live. But I think other institutions were not so forward-looking, not so progressive. Definitely, the J.P. Morgans, Goldmans of the world took a much longer time to get on board. So I had the luck to work at a place that was very open-minded about this stuff, and I'm super grateful for that.
It's pretty interesting. They turned you down at first, and then they hired you for crypto analyst. So I know that you also helped fund a crypto venture fund, Castle Island Investments. Is that correct?
Yeah. So myself and my ex-boss at Fidelity, Matt Walsh, left the crypto fund at Fidelity to start our own crypto fund. And we're based here in Boston as well. And we look at, we don't do ICOs or tokens or anything like that. We just look at equity stakes in operating businesses that are building on top of public blockchains. And of course, the most interesting one to me is Bitcoin. And so that's the one where I spend most of my time. So we're basically betting that equity in businesses building on top of Bitcoin outperforms Bitcoin itself, because otherwise we couldn't justify not just holding exclusively Bitcoin in the fund. But that would be super boring. And people don't need to go through a fund structure to do that.
Very cool. So speaking of like these types of companies that are building on top of Bitcoin's blockchain, what sort of projects do you find are like the most interesting or promising looking forward?
Yeah, so there's always this interesting tension. I think for an entrepreneur to be really successful in building on top of Bitcoin, they have to have a really deep understanding of the direction that the protocol is going. And if they have kind of mistaken views of Bitcoin, they run the risk of building for something which then pulls the rug out from under their feet. And I think the classic example of this is people that started all these businesses in 2014, 2015 that had to do with like payment processing on Bitcoin, which were really heavy on the like base layer, like on-chain usage, and that ended up not necessarily being commensurate with what Bitcoin was for. And when the fees went up to the double digits in like late 2017, a lot of those companies tried to commandeer Bitcoin in some way, or they just had to pivot or go bust or something. So the companies I like the most are the ones that kind of have a very deep appreciation for what Bitcoin is and have also a realistic view of what Bitcoin is. So I like companies that treat it as this like investable asset as opposed to necessarily a payments rail. I mean, I believe it will eventually be a great payments mechanism, but that will probably take some time. So one investment we made was Casa, which is the multi-sig key management company, which really treats Bitcoin as this like intergenerational wealth store. And part of their pitch is, we're going to help you if you want to hold your Bitcoin for your entire life and pass it down to your children and grandchildren. They'll facilitate that. And that was something that was really lacking previously. Not to mention their basically their best-in-class key management, which is a super innovative solution. So that's one example of companies that I really love. Although there are many different super promising venues on Bitcoin today.
If I just jump in real quick, yeah, that's what's really great, Nick, is that it sounds like your investment company understands the ethos of Bitcoin, right? The reason why Bitcoin is here, and the reasons that make Bitcoin Bitcoin, and the reasons that make Bitcoin great. Because often people don't often those don't always align, and it's really interesting to see how most companies come to see Bitcoin as maybe it's just like an app, or maybe as just a currency, just these kind of single angled things. But it does seem like you, especially from our last interview, Nick, that we had you on here on the CryptoCast Network, it seems like, and from what you're saying here, it seems like that you guys really understand the importance of Bitcoin and what makes Bitcoin important. And so I think that that's really, really, really important, because we see companies like Casa that you said you guys invest into that are just real Bitcoin companies from real Bitcoiners, like, right? The main person behind that would be Jameson Lopp, right? And so obviously he's worked in the field for years and worked at one of the #1 custodial solutions, BitGo for years, has a proven track record, and that's what's really great is people investing in Bitcoiners with proven track records. So I also like that a lot. So that sounds really good to hear, Nick. It sounds like you guys know what you're saying, and again, just I couldn't stress how important it is to invest in Bitcoin companies that are real Bitcoin companies. Invest in Bitcoin companies that have the long term in mind, that have, like you say, Casa's talking about next generation, next of kin. This is what Bitcoin is going to be about, because Bitcoin is going to be here for hundreds and hundreds of years, and this is how short-term or long-term short-term time preference, right? As Safety likes to say in his book, this is how time preference matters. When this is what Bitcoin does to your brain. It starts making you think about 10, 20 years, 50 years, 100 years out, and that's just not very common in in general society. So that's all sounds good to me so far, Nick.
Thanks, Vortex. Yeah, I mean, we like to think that we have the best interests of Bitcoin in mind, and even if the startups we invest in don't outperform Bitcoin, then we think we've probably done a service to the whole system. So that's the goal.
I mean, with Bitcoin approaching its 10-year anniversary coming up, it's kind of interesting seeing this whole generational aspect coming in, like you, Nick, studying something to do with blockchains, and then coming in and influencing, you having your own influence on Fidelity, and seeing how I think more people who are more, early on familiar with Bitcoin, how they're going to change these perspectives of different companies and how they invest and what's being promoted. So I had some questions in the chat, and real quick, I want to address the chat. We now have super chat enabled, and so that means you guys in the chat, you can leave a tip if you like. If you do, we will for sure be addressing your question if you accompany it with a question. So we will be trying to get everyone's questions regardless, but just so you know, you have that ability now. So one question from the chat is, when are these financial companies going to get in on the BTC boat? Vortex, maybe do you want to take that one?
Most of the questions are here for Nick. So I'm just trying to hear. I'm just here to help out, but I'll answer when I can. But yeah, we definitely want to go with Nick first on all the questions.
All right, okay. Nick, you're on the frying pan.
When are they jumping on board? Yeah.
I guess probably the general, the big question of when is the institutional investors coming or whatever, and we've seen some of that come already. But go ahead, Nick. I'm curious.
When ETF, man. When ETF.
When ETF. Hashtag when ETF.
If I had to make a guess on the ETF, I would say not within the next 18 months. I think we are further away than many people think. And my reasoning for that is just that it's become very politicized. So the SEC, despite itself, is a political institution, and they have unfortunately been fed a lot of nonsense, basically, from the kind of no-coiner side of the house. And if you read some of their latest statements about the ETF denials, it's clear that they've been reading some of the more critical takes. So that will just naturally, delay the process. But I think, my view of Bitcoin is that it's a virtual commodity, and it's inevitable that it is able to financialize, essentially, and that will be the ETF. But more generally, I would stay tuned for Fidelity's announcement, and Abby Johnson has already hinted about that a little bit. So that'll be in the next few weeks, months maybe. Backed is already been announced. That's live. Goldman has a trading desk. I think the next one is any of the really respected mainstream custodians like a State Street or Kingdom Trust. Like, when do they get in? Because a lot of really, really big names like, the pension funds, the kind of risk-averse allocators, many of them will not use a custodial solution like Coinbase custody, for instance. They need to be able to justify that, and they probably want, really strong assurances on the custody. So they'll be waiting for like a really big name, like a large trusted institution, to actually be able to begin allocating to Bitcoin. And I think it's just it'll happen. It's inevitable. It has begun happening, faster than I expected in some contexts. But it takes time. Bitcoin needs to become more liquid, more robust, have fewer points of failure. Really, the liquidity is the main thing. And if you can make $1 billion trade in Bitcoin that doesn't have market impact, that's kind of what allocators want. I don't know if we're there yet, but we're not like far away either.
Yeah, that's a great point, Sick. I mean, people seem to forget that we're already in the process. The process has begun. All of the efforts that you just mentioned, specifically, I want to call out Backed, which is physical Bitcoin delivery, a real custody solution for institutional investors. This, is something that maybe State Street, right, might want to take a look at or start to mirror in the future. So, like you say, it's people they want institutional investment right now, but they don't understand that Bitcoin is still just a tiny little puddle, right? It's still small. You can still move the whole market. Now, of course, the OTC trades are pretty epic right now, pretty amazing, and dwarf the volume on exchanges in any given 24-hour period. But still, you can still with $1 million pretty much move the price of Bitcoin. So it's just going to take some time, as Nick said, in my opinion. And as he said, this is an inevitability, right? Bitcoin is an economic inevitability, an economic certainty because of its fixed limit, its fixed amount. It's just going to eventually, suck in all the value. So it just takes time.
Yeah, the other thing I would add is that it's kind of odd to see the cheerleading about like large institutions get in. I know this is a hypocrisy that's been pointed out a lot of times. I think Bitcoin is a tool for empowering individuals, more than anything. People that may not have the ability to opt out of their like monetary systems, right? So what I would welcome would be more startups which allow individuals really easy, frictionless access to Bitcoin. Stuff like Azteco, for instance, or startups like Bitrefill, which actually, enable Bitcoin to become really useful in everyday life, especially in the developing world, not necessarily in the developed world, because that's where I think the need for Bitcoin is the greatest in countries with like insane inflation rates or really unstable monetary systems. So, while I do think that institutional adoption is pretty much inevitable, that doesn't guarantee a capital inflow, but it is probably inevitable. I am more excited about initiatives that give normal folks access to Bitcoin directly.
Absolutely great point. I mean, get excited about OpenDime, right? Get excited about Lightning Network. Get excited about Casa. Get excited about these type of Bitcoin-focused, Bitcoin-centric type of solutions that provide the actual utility that Bitcoin it promises, right? Which is censorship resistance, decentralizations, sovereignty over your own money. So this is the type of stuff that I think gets Nick excited. The type of stuff that definitely gets me excited. It's not so much Wall Street, guys. I mean, like I always say, Wall Street wants Bitcoin. Bitcoin doesn't need Wall Street. I mean, technically, we could make the ETF all irrelevant if we just pull our money out of our banks and put it into Bitcoin. We don't even need an ETF. So it's just about having patience and remembering, bringing the focus back to why Bitcoin was here in the first place.
Yeah, that's a epic points. I absolutely agree too. Those who could benefit most are the ones that we're experiencing the hyperinflation now, and like just the crazy kind of capital controls that are happening. And those are the people that are the most hungry to learn about this too. So it's really cool that Bitcoin exists for them. So another really good question that I found here in the chat is, let's see, are we seeing similarities from 1919 through the years 1919 through 1929, like the Wall Street crash? Are we seeing the same decade played out, but 100 years back, and now with blockchain and tokens / BTC, maybe 100 years forward? But are you seeing any similarities with maybe the Bitcoin crash of 2017 and how it's playing out now afterward? Nick?
I would say 100% wholeheartedly. I think the comparison to be made is the 20s where this was this radical period of experimentation in securities markets, and that's when these bucket shops emerged. And the name bucket shops comes from the fact that people would stand on top of buckets and essentially shill on the street, try to sell equities. And there was just rampant misbehavior and lots of nonsense out there in kind of U.S. equity markets. But it was also a time of explosion of growth, but there was nevertheless like rampant fraud. And then when it all came to a head, with the crash in the 30s, then the SEC was created, right? That was a response to the kind of the nonsense and the fraud of the 20s. With innovation in the financial industry, you also get fraud and kind of like silliness that's exactly what we had in the ICO landscape, right? And I mean, maybe to some degree in Bitcoin markets with manipulation and some of the, the shadier exchanges. But I see a ton of parallels to that time. I think that DAOs and to a lesser degree ICOs, those have the potential to be new, kind of interesting capital raising mechanisms, but the vast majority, will lose investors' money and will not give them the protections that they deserve at all. So we are seeing some sort of innovation in financial kind of mechanisms, but many of them are fraudulent. So I see the exact same cycle playing out, and I'm really curious to see how the U.S. government responds, because they don't necessarily even have the ability to regulate this stuff properly. People can just participate in ICOs if they want. But I think eventually the music will stop and we'll have some sort of reckoning.
Yep. Great points, Nick. I just want to add, just generally, markets, guys, they're made of people, right? They're made of people, which means that peoples are going to be using human psychology, which means that we're going to have predictable patterns, right? People FOMO, and people FOMO in, people sell, people panic sell. It's just what human psychology does. We value things much more as they're going up than when they're going down. And that's just why people, buy high and sell low. This is why there's always a loser on the other end of the market, because markets are just human people. That's why we see these patterns repeat themselves over and over again. It's just so funny to me that people don't realize this. They're like, how can these patterns repeat? How can technical analysis work? It's like, it's the same way that's been working for the past century, because humans haven't really changed the psychology in the past few centuries too much. We still panic, we still fear, we still have issues, right? And so it's the same thing. And so this is it's important to remember that when you look back to these previous markets and these previous bubbles and these previous things, fundamentals are always what matters, of course, guys. But remember, it's fundamentally, it's all just people at the end of the day.
Yeah, absolutely. I mean, even though it's blockchains and code and all this technology, it's still people being built, or people building it, and people's money being invested into it. So it's definitely subjected to that flaw. So another question: what is your opinion on Nick Bhatia's Lightning reference rate idea? Will it be more profitable to run a Lightning node and provide liquidity versus depositing your money in the bank? Anyone?
No, it's definitely Nick. I'm quite curious to see what Nick is going to say. Yeah, like I say, we're going to probably go with Nick first in all these, and I'll just maybe add some commentary if I have anything.
All right. Man, Nick Bhatia, love the guy. But an additional point, I love that he doesn't go for this redundant approach to spelling his first name, right? So there's so many Nicks that are N-I-C-K, and Nick N-I-K and me N-I-C, we're totally on the same page. You don't need the redundancy in the K. You just need one or the other. So we're totally aligned on that.
Love it. Love it. Only one letter, either one C or one K. There's no need for a C and a K.
Why do you need both? Why do you need both? Okay, not to derail the conversation. So LNRR, very interesting concept. Very curious to see, what becomes of it as Lightning really heats up. I don't think it will be I don't think the interest rate will be very high, because I believe that lots of people will be running Lightning nodes for free. I think you'll have lots of large custodial or merchant services that just run nodes to provide liquidity to the network, so that they can provision services to end users. And my guess is that they would just run those nodes for free and not take fees at all. So I don't necessarily see why there would be an elevated interest rate at all on Lightning. Although, this is an empirical question. We actually don't know until it gets more popular.
Yeah, it's really tough, to predict these types of things with these networks that are still in beta. It's hard to predict what's going to happen, but that I can tell you that staking, Bitcoin and Lightning is definitely going to be interesting. It's going to provide liquidity. It could provide possibly profits. It's very, very interesting, because again, you can with Lightning, you can be completely anonymous if you want. So it's going to be even hard to track most of these stats in the future, in the coming years with Lightning. Because it is so privacy focused. So it's really, really up to anybody's guess. But I'm with Nick. I love the work that that Nick Bhatia is doing. It's very, very interesting stuff, but just not sure how how we're going to actually frame it as an actual interest reference rate. It's gonna be interesting to see how it all plays out. It's again, I love it because it's this traditional finance mixing with this new crypto world, and we're all figuring it out together. So very interesting.
That's the part that I like, the part where the old finance people can actually provide anything of value. It's rare that we're able to actually contribute productively.
The old guys trying to peep in. So another question. Okay, this is interesting. What is the correlation between hash rate and price? Is this like commoditizing energy? Talk about bringing the old world and the new world. What are your thoughts on that, Nick?
So that's something that I have thought a lot about, right? So I think the causality is often flipped. A lot of people say hash rate increase, causes price to increase, and I think that's total nonsense. Basically, I'm definitely of the school of thought that price essentially dictates what the miners do. The miners will act. They'll either allocate hash power or reduce hash power in response to price and their margins basically, and so I don't really think there is a relationship there. I know it's nice to kind of believe in this theory that what's it like, the labor theory of value, which is kind of the Marxist idea that like doing a lot of work means that it's valuable, but like there's a lot of easy counterexamples to that same idea, like me digging a hole and filling it again. That's not really doing anything valuable, although I am doing a lot of work. So I think that all the value just comes from the demand for Bitcoin itself, and hash is a response to that. So that's my read. It might be kind of a simplistic take, but that's definitely my read on the issue.
Yeah, I have a small point, which is just that people need to realize that miners are not all powerful, right? We saw the user activated soft fork last year. We saw that the community chose that despite all of this hash rate, 90% of the hash power signaling, right? We went the way of what the community wanted. So that just brings it back to, Bitcoin is what you say it is when you run your own full node. So, when people like you're saying, people like to believe that, more money equals, more power, but that's just not really how it works in these types of free open source systems and in a real free market. Real ideas and community and passion usually always win out. You can't because you can't buy off math, right? You can't point a gun at math, and so what ends up happening is that we all just keep following along. I try to tell people in my talk. I have a talk that called "Who Controls Bitcoin," and I try to outline this a little bit in the talk that miners is just one part of this constituency of people, including wallets, developers, and everything else all together. They're just one part. So it's really, really important for people to remember that there's probably some correlation, but it's not so much that there's so much that miners, completely dictate price, and that hash rate completely dictates price or anything like that. It's really not that, like Nick says, you can go and dig a hole all day long. Doesn't matter if people don't think it's valuable, but if people do think it's valuable, then absolutely, there's going to be value assigned to it.
Yeah, the other thing I'll add is that I think there is a feedback loop between hash rate and price at a certain threshold of hash rate, which kind of ensures that Bitcoin is like safe, so to speak. So there's a couple interesting papers that make this point. So one of them is by Pagnotta and Burashi, and they have this economic model of decentralized networks, and they find that there is an equilibrium, if this positive feedback loop between hash rate and price occurs. So, I do believe that there is a threshold where sufficient levels of hash rate cause the system to be considered to be secure, and that has a positive effect on price. But I don't think that relationship is linear. I think it's essentially, there's one circumstance where that occurs, probably that probably happened in like 2011 or 2012 when Bitcoin became so big that it was very difficult to attack. But I don't think that that's like a ongoing causal relationship.
Really great points.
Yeah. Which came first, the chicken or the egg? So with the miners too, considering like how they allocate the hash rate or how they deal with what's happening with the hash rates too, it's kind of the same as like people investing. Like if they see the hash rate going up you know, do they invest more in that, or like if they're forward thinking, or again, depending on what their capital is, what their expenses are. Yeah. So are you guys investing in privacy coins, or will Lightning and other technologies on the second layer replace the need for these projects? Are you guys maximalists in this regard too? So will Lightning Network replace the need for privacy coins, or what are your thoughts on that?
Really good question. Yeah, that's a tough question. I mean, it's one that we wrestle with actually. So I like sat down and tapped out like investment cases for Zcash and Monero. I was actually in 2015, 16, I was like more of a Monero fan than I was Bitcoin. I was like a really ardent, like, we gotta have privacy. If we don't have privacy, it's this whole decentralized money thing is worthless, right? But then I realized over time, like, well, Bitcoin can improve its privacy in theory, and the liquidity part of the puzzle probably matters a little bit more, actually. Liquidity and having like a ton of good development work. So I've been really encouraged by the privacy work that I've seen on Bitcoin. Samurai's done amazing stuff. Nopara, you know, some of that Tumblebit stuff, which might eventually, you know, some of the Chaumian CoinJoin, and obviously Lightning as well. You have a ton of privacy there at the transactional layer. So I don't think we're ever actually going to get confidential transactions at the base layer in Bitcoin. That's like a game-breaking change. That's too big, and the trade-offs are too significant. But the transactional level privacy on Bitcoin is actually very encouraging. And I think a lot of those chain analysis firms are kind of overselling, you know, their ability to actually analyze the chain. So I think they're talking their book, and you know, they believe this, or they're selling this fiction to regulators that they can actually really de-anonymize Bitcoin fully. I don't think they can. And so it's like this arms race. It's like a never-ending arms race between the developers and then the chain analysis firms, and we're going back and forth. So the chain analysis firms won the last battle, but now the developers are really striking back. So I am super, super bullish on Bitcoin's privacy. I think that will continue to improve. It's clearly a big priority for most developers. That said, I think privacy coins like Monero and Grin, you know, really are super, super useful and necessary projects to exist. They can make different trade-offs that Bitcoin wouldn't be prepared to make. And you know, I personally, you know, still have some Monero, and I feel secure in that because I know that it's like completely unimpeachable, you know, can't be tracked really through conventional methods at all. So yeah, I mean, it's actually an ongoing question in our fund. So I mean, I wouldn't characterize us as maximalists, so to speak. We, you know, we're not prescribing that anyone have a position in one cryptocurrency over another. I personally believe that monetary network effects are significant and will drive most users of these new currencies, you know, absent sovereign restrictions, which is why we have lots of fiat currencies. I think that people tend to aggregate under one banner because money is the ultimate network effect. You don't really want to be on a minority money. So I think that that is just kind of an inevitable feature of these monetary networks. But I'm not prescribing that anyone owns anything, you know. So I definitely take exception to the maximalist term.
It's pretty interesting, Nick. You know, I have, again, very, very similar thoughts, Nick. This is probably why I have you on the show. Because I tell you, we seem to just keep thinking similar. This is how I feel as well. I mean, we're never, in my opinion, going to get all the way to the confidential transaction level on chain on Bitcoin.
Very
again,
unlikely, yeah.
You know, like Nick says, it's just probably unlikely because, again, it's all about trade-offs, guys. Everything is about trade-offs. So, you know, Grin is making different trade-offs than Bitcoin is, right? Ethereum is making different trade-offs than Bitcoin is. Nobody is making the same trade-offs that Bitcoin is because nobody is directly competing with Bitcoin. So no one is trying to build a better Bitcoin. So, you know, there's always going to be Bitcoin. Now that Bitcoin will just simply get more and more improved, have more and more utility, gain more and more features over time. But it's never going to be like make that trade-off where the trade-off is that we're just now completely private on chain. That's a bit too much of a trade-off. You give up too much security, you give up all sorts of different things. You give up attack vectors, you give up various things. And so it's important to note that, you know, I don't think Bitcoin's ever going to go that route on chain, but we don't need to, in my opinion. And I think Nick would agree. We have Lightning Network, you know, for anything that you actually want to do, you know, fast private small transactions. That's what the Lightning Network is designed for. And so again, it's all about trade-offs, right? Lightning is slightly less, a little bit less secure than the base chain, but it's orders of magnitude faster. So it's all about trade-offs. And I don't think that I think that some of these privacy coins are making doing interesting things. And again, keeping the conversation of privacy coin alive, even if all they did was literally just keep the conversation of privacy in the media, in the crypto media, that would be enough for me. But they are doing some interesting math, some interesting security. But what I think is going to happen really with Bitcoin on chain is that we're going to apply more and more clever tricks. It's not going to be just crazy cryptography. Now we're going to have some amazing cryptography like Schnorr signatures. That's going to be amazing. But it's not going to be so much just about the amazing cryptography. It's just going to be about some of these tricks that these developers can pull off that can allow more privacy. So something like stonewalling, right? Like Samurai Wallet is doing, that's not using like an additional protocol or an additional feature per se. It's just using Bitcoin in a clever way. And so I think we're going to see more and more of these clever tricks on chain that can be done, as opposed to things that need soft forks or even hard forks. That's even a whole nother more difficult thing to do. So we're going to get more and more privacy on Bitcoin, as we've seen with Lightning already. It's already here, but we're going to get more, and it's going to continue. And the privacy coins are going to continue their route with their trade-offs. Bitcoin will continue with its trade-offs. There's never going to be a privacy coin that's going to have the liquidity that Bitcoin has, and Bitcoin is never going to make the trade-offs to be 100% fully private like something like Grin. And so we're going to have let the free market decide the value to each of those.
Yeah, it's interesting seeing how all these different other cryptocurrencies that exist, they're all trying to they'll have that defense of saying, oh, we're addressing ways that Bitcoin has fallen short. And now Bitcoin is like slow and steady, addressing all these different kinds of issues and trying to provide their own solutions, hopefully without compromising on not trading off too much. So let's see some other questions I've gotten here.
I also have a few in the private chat too.
Oh, okay.
For you. Yep.
Where's the chat? Is it on YouTube that we're looking at?
So there's a public YouTube chat, just so you know, Nick, I probably should have told you this before the show, but we have a public YouTube chat that I can just paste into our internal chat, which is on the top left-hand corner. That's our internal chat.
Okay.
Got it.
Don't worry, Nick. No one's talking crap about you. Okay. So.
No one's talking crap about you, Nick. It's everybody's loving you.
Very friendly. Are you seeing an increase in growth in Bitcoin infrastructure-focused funds relative to other crypto asset vehicles? That's an interesting question.
I would say yes.
That, Nick?
Yeah. So yeah, not to take all the questions here, but
you have to, Nick. That's why you're here, man. You're the smart person. You're the reason why everybody shows up here, Nick. So go ahead.
Beautiful. Yeah. You guys are blessed, because this is like one of the last podcast / presentations I do for the year. I've sworn them off after this. So there we go.
Awesome. Thank you, Nick. It's an honor to be one of the last, man.
Well, Vortex, like meeting you in Riga, it was great, and I figured I had to do the show again. So yeah, I would say
great time in Riga, man. Great time. Sorry, go ahead.
That was a sick conference. That was so cool.
Honey Badger guys, you guys need to check out the live streams. They got 2 days of the live stream, lots of great presentations, including Nick's. Was a fascinating presentation, and he has released his slides as well. So definitely follow Nick on Twitter. Yeah, not to show my thing, but the slides and the video are out. I worked on the data for that presentation for like a month in advance. It was really fun. To answer the question though, the answer is totally yes. I would say we were probably one of the first funds to come out and be like, look, we're unabashed Bitcoiners. We obviously can't be totally exclusive to Bitcoin in terms of our allocating decisions, because the set of Bitcoin startups, the investable universe is still pretty small. So we're going to do some blockchain agnostic stuff. So like, for instance, we just invested in Zen Ledger, which is a tax preparation company, which is for all crypto investors, regardless of what they invested in. So we'll do some blockchain agnostic stuff, but we are still fairly Bitcoin focused. That's obviously my main focus. There are other funds being raised. I won't name names right now, but I would say there's 2 significant funds being raised by people that I know that are ardent Bitcoiners, longtime Bitcoiners, and I'm sure they'll be extremely successful. And so I'd like to think that Castle Island kind of encouraged some people to go for the Bitcoin only approach. I would say 2 or 3 actually. 2 or 3 funds that I know of right now are being raised right now.
to focus on just Bitcoin infrastructure. So I think it's actually a really positive time in the Bitcoin entrepreneurial landscape. Capital is very, very available right now. If you're smart, a Bitcoin entrepreneur, capital is super available.
This one might be more aimed towards Vortex to give Nick a little bit of a break. Any speculative thoughts on how long it will take to reach hyper-Bitcoinization? I have noticed that Vortex and other shows seems to think that by 2028 this will be done. Any additional thoughts?
Yeah, so I definitely give a few predictions.
Is that something you said?
So I give a few predictions. I never say anything is going to be done, right? Because nobody actually knows the future. I say things like, Lightning is going to be mostly completely integrated into the crypto ecosystem by the end of next year. But for the most part, integrated, right? So that could be a little bit later than next year. It could be a little bit earlier. And then for sure with hyper-Bitcoinization, what I've said basically is that by 2024, essentially, right? The prices at that point, the governments are going to be holding Bitcoin. So we're going to be definitely over $100,000, if not $500,000 by then. And then by 2028, halving. At that point, most of all first world governments will be publicly holding Bitcoin. Bitcoin will be the main, settlement layer of the planet. It'll, if it survives that long, right? If Bitcoin becomes everything we think it will, that's pretty much the outlook. Is that by the 2028 halving, we will have something that Andreas describes as infrastructure inversion, which is we will have switched over that point, like we've switched now all telephony over to the internet, pretty much. We will at some point, switch most of the finance over to the internet as well, and most likely over the top of Bitcoin for settlement. So it's going to take a long time. Of course, some people predict decades. Some people predict, just in a couple of years. Personally, I predict, that by 2028 it'll be mostly over to the point to where Bitcoin will be well over $1 million. It'll no longer be an investment vehicle, right? It'll just be sound money. It'll just be what you spend, what you save in. It won't be so much as think of it as an early investment vehicle anymore. It will just be the world's sound money by then. That's my prediction that's my 2028 prediction, Nick. But I'd like to hear your thoughts on that. What do you think? How long it's going to take to get hyper-Bitcoinization? Of course, it's all speculation. Nobody can really know. But that's pretty much my thoughts. Is that by 2028, like we'll be well into, if not beginning, hyper-Bitcoinization.
I don't know if I want to go on the record and like call out dates when I think any like practice milestones, because people are going to flame me about that.
Exactly. If I say something, guys, it doesn't matter. Nobody freaking cares. But see, if somebody important like Nick says something, guys, we have to give him a break, because now he's going to be quoted in every freaking news article, every freaking thing you can think of. So
I've got the shivers thing about all those like people that got quoted with their Bitcoin price targets for the year, and now they're just getting like trashed about it. It's very unfortunate.
No regrets, man.
We'll I hope no one like is looking at my old tweets, because there's a lot of nonsense in there.
Oh god, we all have.
But for like before we can get to hyper Bitcoinization, we just need Bitcoinization. And I think that's most likely to occur if there's a collapse of a weak sovereign currency in a country that is very online, very well connected, has excellent internet infrastructure. The stumbling block there is that we need Bitcoin on ramps. Fiat off ramps to exist. And let's say Coinbase was the only exchange in like generic country having a currency crisis. They couldn't Bitcoinize because the government would probably just be like, look, Coinbase, our currency is super weak right now. It's suffering. We're imposing capital controls. We're going to shut you down for now, the local office, because we want to protect our currency. So what we need is like a more robust kind of anti-fragile exchange or fiat off-ramp system, whereby people can easily use money changers, banks, anything to like get out of fiat and get into Bitcoin. And honestly, I actually don't see that in any country in the world today. Right now, I don't see a sufficiently robust system of exchanges. So I don't think we can Bitcoinize until we've built that. So that's what I'm looking for. I'm looking for an entrepreneur that comes to me and says like, look, I want to build the ultimate fiat off-ramp to give normal folks the ability to leave the fiat system and enter the Bitcoin system. That's what I'm looking for right now. Would love to find it, and I'd love to hasten a Bitcoinization process in any country, because I really believe that there will be a bunch of currency crises in the next 3 to 5 years. 100% certain about that.
And absolutely, and remember, like this is where we get all the innovation, right? Bitcoin itself came out of the 2008 financial crisis, right? So when we have these financial crises, and now that we have Bitcoin, you can better believe that somebody somewhere is going to be affected by these currency crises and want to build something better. And there's going to be people like Nick that are going to be looking for these infrastructure type of companies that are going to help build out this huge next layer, this Web 3.0, right? The internet of money. And it's going to take a while. It's going to take years. It's going to take longer than what everybody thinks, but it eventually will come to pass. And I'm just really glad that that we have investors like Nick out there, and that we have developers out there like or people out there thinking about this stuff like Nick Bhatia, and then developers out there like Nicolas Doyer, right? Nicolas Doyer creating BTC Pay server that are willing to put the time in to create these open source off ramps, these open source projects that end up being the infrastructure for this new internet of money. And the software like BTC Pay server is a perfect example of that. And so I'm super grateful for those type of people, and it's coming, guys. It just takes time. We have to build out the infrastructure.
Yeah, I mean, just to clarify, I think I'm a fairly marginal player, and my impact is very limited here. All I can do is allocate capital, which is, nowhere near as significant as someone that is actually building out a business, putting their neck on the line, writing code, creating something useful, creating a useful product. So, I would, encourage people not to focus as much on the allocators and focus more on the builders, because they're the ones that actually matter at the end of the day.
Yeah, and just to close up this question, somebody the person who mentioned it in the chat did mention that my thesis and my outlook for this Bitcoin pricing and for the hyper-Bitcoinization and for just the the infrastructure rollout is definitely very much based around the halvings. The halvings, 2024, 2028. This is where all of my where everything kind of gets placed. These are the main big, huge events in Bitcoin. So of course, that's exactly where I'm going to base the majority of my speculation is around those type of events, those big events. And Lightning was a big event as well, launching on mainnet. That was huge. Unfortunately, didn't do much for the price, of course, but it was huge in the developer space, the infrastructure space, investor space. People are aware of the people that need to be are aware of how powerful Lightning is, and it just takes time. But again, around the halvings, this is where we can guarantee huge amounts of market activity with Bitcoin.
I'll be, just to jump in quickly, I'll be the heretic here and say I actually don't believe in the halvings as a catalyst for price moving at all. So again,
not near term, right? But long term, you must obviously.
I don't believe in. I honestly don't believe the halving digs are important at all in the slightest. Yeah. So
we finally disagree, Nick. Thankfully.
Yeah, it's good. We found something we disagree on. Yeah. So again, this is like a product of the fact that I went to business school and we were like indoctrinated into this idea of efficient markets. But the kind of theory there states that like if there is information which is known in the market, ahead of time, that in theory should be priced in, as opposed to being a shock. So like only unexpected or novel information can constitute a shock to markets, which causes like new price action to occur. So to put it much more simply, on day one, everyone knew that there would only ever be 21 million Bitcoins. So I don't think it was a surprise to anyone that the halvings occurred on schedule. Now, if the halvings started happening like way too quickly ahead of schedule, then that would be new information. That'd be a shock. Or if they like didn't occur, that would also be a negative shock, right? But yeah, it's my sincere belief that kind of everybody that is an allocator here knows that there would be only 21 million Bitcoins. So I don't think it should be a surprise to anyone, and I don't think there should actually be a market impact when there is a halving at all.
So I guess that kind of ties into your opinion on the hashing rate also, and how the miners get paid out. So I have a question for you. Do you attribute the price movements of Bitcoin purely on human psychology then? Is that what you're saying?
No, I mean, I would say it's just a function of demand, which is like how much demand do people have for non-state money? And since people are gradually finding out about its existence, the demand scales with the proliferation of that information, which is why it has such a tight correlation with Google searches. Because if we look at Google searches, we see people discovering Bitcoin in real time. And some subset of those people want exposure to it. So the fact that we've been on this exponential curve is just because more people on Earth are discovering Bitcoin, every year. So I wouldn't say psychology as much as just this is a novel commodity that has interesting properties, and some fraction of the world wants access to it, but they don't all find out about it all at once. So as those cycles of interest and adoption occur, people find out about it.
Yeah, and I also just want to add that to me, I also believe that having plays one of these self-fulfilling prophecies as well, because everybody knows about it, right? So everybody knows about it. So really, traditionally, if you look back at the prices of Bitcoin, it has had significant pumps, significant rallies, roughly anywhere between 11 to 22 months before a halving. If you look back, so I think just like technical analysis, right? Like it's just self-fulfilling prophecies. We know that for 100 years, people have done this when this happens, so probably going to happen like this, So it just seems like it can also have a self-fulfilling prophecy aspect to it as well.
That's fair.
Maybe to break up the mood a little bit. My wife is giving me a hard time for thinking and talking too much about Bitcoin. Do you guys have the same problems with your significant others? Nick, maybe you can speak to this.
We're getting a little fun with it now.
Yeah, my girlfriend is like not into Bitcoin. Even though I gave her some Bitcoin for her birthday, she's still not into it. So she's grumbling. I can hear her grumbling in the other room right now.
Heresy. No, yeah, for me personally, I've definitely, exhausted the patience of my friends, family, wife, any relationship I've had in my life. This is why I've created the channel, right? This is why I have Twitter, so that I can hear, so I can watch Nick tweet 24/7 on Twitter. Nick seems to just play Nick, but you seem to definitely tweet like more than some other people that I know. But what's great about Nick's tweets though is that it's all signal, guys. It's lots of good information. So you definitely need to follow him.
Not. Definitely not. I counted, and I tweet 30 times a day on average over the last year, which is like absolute addiction.
It's too much. It's too much. But we do get a lot of signal out of Nick, so I definitely still encourage people to follow you. But yeah, this is why we're here, guys. On YouTube, so that we can on YouTube, on Twitter, on these social media, so that we can spread the word about Bitcoin. Because this, of course, is where the world is in the information age. We are all on the internet. We're on YouTube. We're on Twitter. But make no mistake. We talk to Bitcoin a lot about. We talk about Bitcoin to a lot of important people. In the meet space as well. Meetings, of course, it takes a lot of effort to set up meetings with people for this channel, right? I'm talking to people all the time. And so it really ends up being a great way to talk to satisfy your Bitcoin fix. But we encourage, really what we encourage the most is for people to educate. So if you find yourself, right, maybe talking a little bit too much about Bitcoin, start a blog, right? Share your information with the world, because I guarantee you, if you find the information valuable, somebody else will as well. So make no mistake, if you think something is cool, somebody else is going to think it is cool too. So just don't hide your information. Let the world know what you think. And this is what we're doing, and this is why we're here. We believe that there's really nothing else more important in Bitcoin at this point in time in mankind's history. So that's why we're here sharing our thoughts.
Yeah, just to chime in a little bit, I was very averse to blogging and even sharing my thoughts at all for like the first 3-4 years of being a Bitcoiner. I was just a very quiet Bitcoiner. And then eventually I was like, well, maybe I have like some interesting stuff to say on this topic. And I realized that, some of my blogs are reaching like tens of thousands of people, which is like obviously not like big numbers or anything. But I found that writing or content creation in general is like the highest leverage activity that you can do. And you both know this, I'm sure. So I definitely try and like keep a firewall between like my private life and my public professional life, which is all Bitcoin all the time. But my outlet is definitely blogging and occasionally coming on shows, but mostly just writing Medium posts. And that's enough for me. I don't necessarily have to be sharing this stuff with people that I know. just sharing it with strangers is good enough.
Absolutely.
Yeah,
sorry. Go ahead.
Part of it can be a little disheartening trying to have a deep crypto conversation with like your family who isn't necessarily as into it. So it's good to find a crypto family for sure. There's a couple really good questions I want to be sure to cover before we hit that hour mark. One is for Nick. I know you co-founded the NVT, the network value versus transactions pricing kind of mechanism thing. How much attention do you pay to Bitcoin DOM index?
The Bitcoin domination index. Somebody had a question about that. Basically, Nick, the question was like, how much does your firm or do you personally pay to the Bitcoin domination index when it comes to investments and stuff?
Yeah, I mean, it's total nonsense, right? It's a completely junk index. It doesn't even make sense, actually, as an index. It's a bad index. And the reason for that is because every time a new ICO or altcoin is created, the denominator grows, right? That's like, because the numerator is Bitcoin's network value, and the denominator is like everything else's network value. And so it's not actually a good time series index at all because it doesn't really track Bitcoin's performance relative to everything else. The index could be decreasing just if Bitcoin was flat and more ICOs or altcoins were being created progressively. So it's obviously a completely nonsense index. And I suggest that people use traditional indexing methodology, which is not that complicated. You define a basket, and then you have to create the set of the denominator essentially fixed relative to the numerator if you do want to treat it that way. But more generally, the index also sucks because market cap or network value is essentially illegitimate. And if you want to explore that a little bit, watch the talk I gave in Riga. For whatever reason, we're counting coins which are totally lost or not active in network value. And it's just super arbitrary. Like if you look at Stellar, for instance, they have something like 20% outstanding, 80% in reserve. There's just a huge amount of arbitrariness in the way that we're counting network value, market cap. So I would encourage people to try and depart from these notions of market cap, which are peddled by like CoinMarketCap and so on. And if you do want to look at a dominance index, I would go to a website like the BletchleyIndexes.com. They have a really interesting, much more rigorous indexing methodology. Just because CoinMarketCap is the biggest does not mean that they actually have any serious financial chops. So whether the Bitcoin index, dominance index, is like rising or falling is completely immaterial to me. I don't think the Bitcoin and ICOs are even in the same category. So I don't actually think it makes sense to compare them at all.
Yeah, great points, Nick. I've seriously, for the past couple of years, have not understood still why we're putting an index of Bitcoin in with proof of stake coins. What kind of nonsense does that make? It takes
because they're costless to create, right? They're costless to create. That's the nothing at stake problem, right?
It's absolutely ridiculous. And so again, guys, check out Nick's talks from Riga. He has released the slides as well. There's a whole lot of data in there that relates to this specifically, that relates to transaction, that relates to value of Bitcoin. A couple of really novel calculations in there. So definitely check that out, guys.
Yeah, I would say like if we're comparing currencies, let's compare currencies with currencies, right? So like compare Bitcoin with Litecoin, other proof of work assets, right? If you're going to compare ICOs, which are a form of pseudo equity, if you ask me, compare the ICOs with the ICOs. Those things have nothing in common with Bitcoin. I don't know why we're intent on like smashing them together into some like Frankenstein index. That is just a conceptual mistake. The taxonomy is wrong. So I don't believe in the Bitcoin dominance index. I don't care if the number is 90% or 10%. I just don't believe in it.
Yeah, I mean, sorry, I got mixed up with the questions. Okay. I'm just gonna go right into another question because I totally lost my train of thought. Sorry.
It's easy to do, Heidi. It's live. We're still training Heidi on live. We're still getting her used to the live stuff.
All these like little chat windows keep popping up and like throwing me off too.
I know. Right. Also, guys, just to remind you guys, Heidi does have an amazing YouTube channel, Crypto Tips. You guys definitely got to check that out. But I'm trying to get her used to the live, so I'm trying to indoctrinate her into the live ways.
Live is tough, man. Live is tough.
I'm not often in a place with like reliable Wi-Fi, so this is a treat. So, okay, here's one. What do you guys think about Samurai's option to remove fiat value on your wallet? So I'm guessing it's all based on Bitcoin value. What do you think of that?
Vortex?
Well, I love it personally. I mean, I like to measure everything in Bitcoin in Satoshis. That's how I measure Bitcoin value. I don't really measure it too much in dollars. One Bitcoin is one Bitcoin to me. So for me personally, I love it a lot. Now, of course, it's going to become really difficult if you're actually using a business, obviously, because there's a lot of things that are still priced in fiat, right? So it's going to be difficult and probably an inconvenience for a bunch of people in the beginning. Their whole mantra is that it's always going to be too early. There's never going to be a good time to do it. So they just took the plunge. And I definitely commend them for that and really thank them for that because somebody had to do it at some point. It's going to happen. Hyperbitcoinization will be here one day. But we need to start measuring, remembering that, the Bitcoin's value is in Satoshis, not dollars. Like how many Satoshis you have is the wealth that you need to measure. And so very, 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 very precious Satoshi. So I commend them. I think it's great. It's probably too early, but then again, everything is too early. Right now in Bitcoin, the whole space is just absolutely super early. So I think it's great, but it's probably a little bit too early, maybe like a year too early, but I love it. I commend them and I hope that more wallets do it soon.
Yeah, I don't have a problem with that at all. I don't have Samurai because I have an iPhone and when iOS, so they haven't released their app for iOS to my knowledge. I would totally use it when it comes out.
It's coming. It's coming, and I'm excited about it as well. Yeah.
That's what I heard. Yeah. I think it's absolutely fine because my view is that they're targeting a very sophisticated kind of Bitcoiner audience anyway. So those people will be much more able to kind of synthesize and parse the notion of a Satoshi. What is the rule of thumb now? Like 10,000 Satoshis are roughly 1 cent, or like if Bitcoin was $10,000, then 10,000 Satoshis would be $1, right? So I think eventually we will just come to intuitively understand the relationships there. But it takes a lot of getting used to, and so that's why they're going ahead and doing it now, because people need to get used to it.
Do we have time for one more question, Nick? Vortex, do you mind if I do one more question?
Good. We have to ask Nick. Nick is the one that has the valuable time here.
Go ahead. Yeah, go ahead.
Okay, there was one that caught my eye. I thought it was really interesting. Any developments in the area of blockchain size management? Lightning is addressing transaction speed, but I haven't heard much about solving the blockchain bloat problem.
Yeah, I'll go first. That is a really good question, actually. So the size of the Bitcoin data directory is what, like 180 gigabytes or something approximately? Vortex,
Yeah, it's getting up there. It's getting to be almost 200 gig. I'm not sure if we hit 200 gig yet.
Okay, so like, I think that's okay, right? I'm on like a tiny little MacBook, and this thing has a terabyte solid state drive on it, and I run a Bitcoin node, so it's like okay. I'm not too concerned about that. If it was Ethereum, it would be another question entirely. They count things kind of differently, but I know it's over a terabyte for the full archival node. And if you look at Ripple, it's 19 terabytes, I believe. I know because we actually run a Ripple node for Coinmetrics, and it costs us $1,000 a month to run.
God.
So if you ever want to know about like the whole like decentralization, why we're doing it, like is keeping cheap nodes cheap like worth it? Just like consider the running Ripple node costs $1,000 a month. Yeah, I think Schnorr will help, right? Schnorr will definitely help because you can aggregate a bunch of inputs together and reduce the signatures. So that would be useful. But yeah, my view is that the block size cap actually does a good job of keeping the data directory from growing too much. So I think Bitcoin's in a really good place just because the design philosophy was always, let's try and keep nodes as cheap to run as possible. I'm not necessarily the most technical guy though, so I'll defer to Vortex on this.
Yeah, so basically what we have right now is we simply don't have. Well, first let's address this, because a lot of people get this confused. The whole block size scaling debate issue. A lot of people get confused and saying, "Hey, why can't we just add another megabyte, right? Why can't we just increase the size?" And there's twofold. So there's one, of course, which is the space. Which is the blockchain is around 200 gigabytes right now. We want to keep that as small as possible for as long as possible, so that as many people as possible can continue to run it. So that's one area. But the other thing is bandwidth, right? It's not so much a capacity issue when it comes to space. It's the bandwidth. That's what we're limited by. We're limited by the speed of light. We're limited by physics. And so because of this, we have to keep the block size at some small amount, so that we can just transfer these blocks constantly all over the world. And it's important to look at, if you look at how the internet is built, and you look at the TCP/IP, and you look at the protocols and the routing tables, you'll see that the average routing table size, for the internet is similar to a couple megabytes. It's just passing around routing tables of a couple megabytes around the world, with IP addresses and locations. And it's done that for a very important reason, so that all of the complexity can happen on layers above, right? That's what's really important about scaling is layers. How every single network and computer science technology for the past centuries, since we've had computers, has scaled with layers. It's specifically when it comes to networks, right? When you're talking about crossing time and space, we have to optimize for different application uses at different layers of the protocol. And so you'll find that everything in network topology, everything with programming, everything with software has layers. And so this is what Bitcoin will have as well. And when we're talking about filling up the actual space of the blockchain, again, as Nick mentioned, that limit is set. We have a 1 megabyte limit. That helps a lot. This is not no Ethereum where you can just stick on CryptoKitties all day long. No, this is, this block space is very, very, very important and very valuable. And it will continue to be valuable as long as people find Bitcoin valuable. And Bitcoin will continue to be valuable as long as it provides utility for people. And it's only increasing more and more in utility. As Nick mentioned, we're going to have further optimization with things like Schnorr signatures. But that's not what you want to take away. What you want to take away is the ethos. The ethos of the Bitcoin development, of the Bitcoin core development, will not allow the blockchain to get bloated. We simply will not provide the ability for developers to screw up. This is what's beautiful about Bitcoin and its limited scripting language. And even when we have more complex scripting languages coming over the top of it with something like simplicity, it's still going to not be Turing complete. It's still going to make sure that we know exactly how this contract will execute, and we'll make sure that it is the most optimized as possible. And Nick, when you say that Ripple was 27 terabytes, my God, I did not know that. Like, that is absolutely insane. If you want to know why we keep Bitcoin so strict about keeping Bitcoin optimized, is again so that we can achieve this decentralization, so that anybody can run a Bitcoin full node. Anybody right now can go to bitcoin.org, download the latest version of the full node, start verifying their own transactions with zero third parties. Zero, as in zero. The whole mantra about Bitcoin and its development ethos is decentralization, is don't trust, verify, is to make sure that we don't have to trust third parties. And so we're going to continue this route. Bitcoin's going to continue this route. And this route, part of this route is making sure that we don't have bloat on the blockchain, is making sure that we don't have CryptoKitties running freaking wild, is to make sure that we don't have double spends all over the place like BCH. Bitcoin will continue to remain optimized. And again, the big takeaway is it's not so much the space that's really the issue, though it is a big issue. It's really about bandwidth when it comes to the scaling debate and block size. It's really about bandwidth.
Yeah, that's actually a really great point. It's not about the bytes of memory. It's about the daily cost of running a node. I think it's impossible to run an Ethereum node on an HDD today. I was just looking at the Stack Exchange. It's like full of like, oh, I can't run a Geth node.
Just sorry to interrupt you, Nick, but from what I read on a tweet the other day from I think either Jameson Lopp or John Light tweeted it, I think, where they're talking about they were putting out three fires a week on their inferior node, trying to keep their Geth node, trying to keep their Geth node synced. 3 fires a week. It's the equivalent of their database basically going down 3 times a week because Ethereum simply is that bloated.
Trust me, we were on several Ethereum nodes for coin metrics. It's a nightmare. It's really funny how you do the stuff, practically to try and extract data from all the different public blockchains, and you actually learn how much it sucks to run nodes that aren't Bitcoin. The other thing I'll add is that I'd say Bitcoin is probably the only blockchain where block space is treated like a precious commodity. In many other blockchains, it's just abused routinely, or it's treated as something that's like essentially infinite. But in Bitcoin, the design philosophy has always been, let's cap it, we'll make it expensive to abuse it. And that has worked well because exchanges and the big heavy industrial users were, induced to like use SegWit, try and batch. Like 40% of outputs on Bitcoin are batched today. That's amazing, right? They don't have to be batched, but they are. So, the big industrial users have optimized their usage of the block space. And that's in response to not only the cost of being suboptimal, but also the social cost, because Bitcoiners are very active and they'll be like, one SegWit, one SegWit. That's amazing. Keep asking one SegWit. These exchanges and like big heavy users, they need to be held in check. And they need to be considered the stewards of the blockchain, essentially. And if they abuse it, then everybody suffers, right? So, yeah, I would say Bitcoin is probably the only network where there is so much ardent like policing of the block space.
Yep, it's such a great point, Nick. And again, I'm really glad that we drove this point home because there is a lot of confusion out there, especially when you have things like Ethereum just saying that please fill up our blockchain, and Ripple with 27 terabyte hard drives, 27 terabyte nodes. Like, people need to realize this is what Bitcoin is all about. This is what Bitcoin. This is why nobody's trying to create a better Bitcoin. And so just couldn't thank you more, Nick, for coming on. I really appreciate it. I just wanted to also just thank Bitcoin Wisdom there for the super chat. We really appreciate it. He says he loves the show, and we love having you guys. So we hope you guys learned something tonight, and I'll let Heidi close it out.
Thanks, Vortex. You are a very huge asset for this show, by the way. Thank you for helping facilitate. Yeah, so for those of you who did not know, there was a super chat enabled for this video. So there were some tips that we received, and it's very much appreciated. So thank you very much, you guys, for that. And I think we covered a lot of things. There's still a lot of a few questions that maybe we didn't get to, but super interesting. I'm taking a note of them, so maybe we can address them in future videos too. So Nick Carter, thank you for devoting an hour and 10 minutes of your time. Do you have any links that you would like people to check out, maybe where they can learn more about what you're doing, your blogs on your Medium that you are very passionate about writing now? Where can people find you?
Yeah, I mean, on Twitter is the easiest way, and if there's anything that I'm really trying to push, it'll be on Twitter. I also blog at Coin Metrics and on my Medium, but Twitter is the #1 place.
And your Twitter handle is Nick_Carter, correct?
2 underscores, because
2 underscores.
Some guy took the 1 underscore version. I'm really mad at him in like 2008.
And of course, we have all the show notes, guys, below. You guys can find out where to follow Nick and Heidi and myself and everything like that. So yeah, definitely. Sure. And of course, we're gonna have more shows this week. We're gonna have more shows next week as well. We got Perspectives coming up. We got Deciphered's coming up. So we got a lot of stuff coming up, guys. We really thank you so much for joining us. And again, Nick, thank you so much, man, for coming on. Really enjoyed the conversation as always. I learned a lot, and I'm sure the people in the chat learned a lot. A bunch of people already said that they learned a lot tonight. So we all thank you guys. We all thank you, Nick, so much for coming on, and we definitely thank everybody here for watching the show. So yeah, I'll let Heidi close it out.
Closing out again. Thanks, guys.
Thanks everybody for joining. We really appreciate it. And
thank you.
We'll see you guys next Thursday. Next Thursday again at 5 p.m. Pacific, of course. And and of course the Bitcoin News Show every Sunday at noon. So until next time, guys, keep talking Bitcoin.
Okay.